Okay, let's dive into Amber Enterprises Q4 financial year 2025 and financial year 2025 results presentation from May 2025. The first slide highlights some pretty impressive growth figures.
Yeah, it seems like they had a strong year. Revenue is up significantly.
Absolutely. It says here that revenue reached 3,754 crore rupees in Q4, a 34% year-over-year increase. Their operating EBITDA also jumped by 34% to 314 crore rupees, and PAT, or profit after tax, grew by 20% to 118 crore rupees.
Those are solid numbers for Q4. What about the full fiscal year?
The full year looks even better. Revenue surpassed the 10,000 crore rupees milestone, reaching 9,973 crore rupees, a 48% increase compared to the previous year. Operating EBITDA is up 53% to 796 crore rupees, and PAT soared by 80% to 251 crore rupees.
Wow, 80% growth in PAT is really something. They also mention ROCE, return on capital employed.
Yes, ROCE is at 19.5%, a 690 basis point increase year over year. That indicates improved efficiency in capital utilization.
Definitely a good sign. Moving to the next slide, let's get a visual breakdown of that performance.
Right. This slide provides a clearer picture of the consolidated operating EBITDA and revenue build-up for both Q4 financial year 2025 and the full year financial year 2025. It reiterates the revenue figures we just discussed: 3,754 crore rupees for Q4 and 9,973 crore rupees for the full year.
And the operating EBITDA figures are 314 crore rupees for Q4 and 796 crore rupees for the full year. The slide also breaks down the revenue and EBITDA contributions from different divisions, right?
Exactly. For Q4 financial year 2025, consumer durables contributed 2,787 crore rupees in revenue and 234 crore rupees in operating EBITDA, while electronics contributed 842 crore rupees in revenue and 50 crore rupees in operating EBITDA. The Railway Subsystem and Defense Division contributed 125 crore rupees in revenue and 30 crore rupees in operating EBITDA.
And for the full year financial year 2025, consumer durables accounted for 7,329 crore rupees in revenue and 562 crore rupees in operating EBITDA. Electronics brought in 2,194 crore rupees in revenue and 151 crore rupees in operating EBITDA. The Railway Subsystem and Defense Division contributed 450 crore rupees in revenue and 83 crore rupees in operating EBITDA. So consumer durables is still their main revenue driver.
It seems like it. The next slide focuses specifically on the consumer durables division.
Okay, so this slide provides an overview of the consumer durables division. It highlights their bill of materials catering capability with around 70% in-house.
Yes, and it shows the RAC room air conditioner, FG finished goods, and component business verticals. It also mentions the concentration of RAC CBU, completely built unit, as a percentage of total revenue, which has reduced from 72% in financial year 18 to approximately 43% in financial year 2025.
That suggests they are diversifying their product portfolio. The next part of the slide shows their product portfolio.
Correct. It includes split ACs, window ACs, inverter ACs, cassette ACs, ductable ACs, refrigerators, washing machines, microwave ovens, and water purifiers. They are also manufacturing components like injection molding, motors, sheet metal, copper tubes, and heat exchangers.
So quite a wide range. What target segments are they focusing on?
The target segments listed are AC and components, non-AC components, commercial AC, window AC, the automobile industry, energy meters, and set-top boxes. Now the presentation moves on to the consumer durables division's performance.
Okay, this slide shows the revenue and operating EBITDA for the consumer durables division for the past few quarters and fiscal years.
In Q4 financial year 2025, revenue was 2,787 crore rupees, up from 2,199 crore rupees in Q4 financial year 2024. Operating EBITDA was 234 crore rupees, up from 179 crore rupees in Q4 financial year 2024.
And for the full year financial year 2025, revenue reached 7,329 crore rupees, a 46% increase from 5,009 crore rupees in financial year 2024. Operating EBITDA also saw a significant jump to 562 crore rupees, up 59% from 353 crore rupees in financial year 2024.
The comments section highlights strong RAC business growth driven by positive industry demand. They also mention a market share of 26 to 27% in RAC manufacturing for the year and converting a big MNC customer from gas charging to a full ODM/OEM solution.
That's a significant win. They also diversified their offerings into more margin-accretive component spaces, according to the text here. Moving forward, the next slide covers the Electronics Division.
The slide introduces the electronic component manufacturing scheme launched by MeitY with an outlay of 22,919 crore rupees to create a robust component ecosystem. Amber plans to file an application for PCB categories of the scheme.
This division seems to be expanding.
Yes, they have 5 facilities and are expanding at Hosur. They have a joint venture with Korea Circuit for HDI, flex and semiconductor substrates, targeting the mobile, IT, module and semiconductor industries. Korea Circuit owns 30% of the JV and ILJIN owns 70%. The presentation mentions that it strengthened the bare PCB offering as a comprehensive full-stack EMS player. The expansion at Hosur will add a new capacity up to 840,000 square meter annual capacity.
Okay, that's a sizable expansion. They are aiming for commercial production to start by Q4 financial year 2026.
Exactly. The next slide shows the Electronics Division's revenue mix.
This slide shows the revenue split between PCBA and bare PCB. In financial year 2025, PCBA accounted for 85% of the revenue, while bare PCB accounted for 15%.
The next part of the slide shows the diversified customer base with a rich mix of segments.
It lists automobile, hearable/wearable, consumer durable, IT and telecom, industrial and others. It seems they're working to further enhance their customer mix. Moving on to the electronics product portfolio on the next slide.
The next slide details the electronics product portfolio. They are targeting consumer durables, industrial, automobile, defense and aerospace, IT and telecom, and smartwatches.
The product portfolio expansion chart shows progress from financial year 20 to financial year 2025. We can now see the electronic division performance.
In Q4 financial year 2025, revenue reached 842 crore rupees compared to 484 crore rupees in Q4 financial year 2024. Operating EBITDA was 50 crore rupees, up from 33 crore rupees in Q4 financial year 2024.
And for the full year financial year 2025, revenue grew by 77% year-over-year to 2,194 crore rupees. Operating EBITDA jumped by 119% year-over-year to 151 crore rupees. It says that they surpassed their revenue growth guidance of 55% for financial year 2025.
The comment section notes that the imposition of anti-dumping duty on PCBs enabled inroads into customers of consumer electronics, IT, auto EV, aerospace and defense. They also bagged new orders in the segments of defense and renewable energy for PCBA during the year.
This shows significant growth in the electronics division. Next, the slide adds that Electronic Division ROCE was around 26% for financial year 2025. Shifting our attention to the next section in the presentation, let's discuss the Railway Subsystems and Defense Division.
Okay, the overview slide highlights an order book visibility of over 2,000 crore rupees for this division. They are focused on collaborations and product expansion with technology transfer agreements.
It mentions a JV with Eugene Machinery for driving gears and the addition of brakes into the Eugene Machinery JV product lineup. Sidwal's new greenfield facility is expected to commence operations by Q3 financial year 2026.
They are expanding new facilities and driving gears. The following slide details the Railway Subsystems and Defense product portfolio.
Their product portfolio includes HVAC railway, metro and bus, microprocessor controllers, defense HVAC, data center HVAC, pantographs, couplers, driving gears, gangways, doors and pantry. They are also diversifying into new areas like bus HVAC and brakes.
The final comment section on the next slide discusses the Railway Subsystems and Defense Division's performance.
In financial year 2025, revenue declined by 6% year-over-year to 450 crore rupees due to delays in metro projects and the Vande Bharat Express project. Operating EBITDA also decreased to 83 crore rupees.
We should also look at the Q4 performance for the Railway Subsystems and Defense Division.
Good point. In Q4 financial year 2025, the division's revenue was 125 crore rupees, which is a slight 2% increase from 123 crore rupees in Q4 of the previous year.
And the operating EBITDA for the quarter was 30 crore rupees, up 38% from 22 crore rupees in Q4 FY24. The EBITDA margin also improved to 24.2% from 17.8% last year, indicating stronger profitability in the quarter despite the full-year challenges.
That's encouraging. It shows the division is recovering even though the full-year numbers were impacted by project delays.
They remain optimistic about doubling the division's revenue over the next 2 financial years, and the construction of Sidwal's greenfield facility is progressing well. This section says that the construction of Eugene's production facility is expected to be ready by Q1 FY26.
They also bagged a big HVAC order for a metro project during the year. The next section transitions into the consolidated financial performance.
The consolidated profit and loss statement on the next slide shows the overall financial results for the company.
In Q4 financial year 2025, revenue from operations reached 3,754 crore rupees, a 34% increase year-over-year. Gross profit was 622 crore rupees, with gross margins at 16.6%. Operating EBITDA was 314 crore rupees with operating EBITDA margins at 8.4%. PAT was 118 crore rupees with PAT margins at 3.2%.
For the full year financial year 2025, revenue from operations was 9,973 crore rupees, a 48% increase year-over-year. Gross profit was 1,787 crore rupees with gross margins at 17.9%. Operating EBITDA was 796 crore rupees with operating EBITDA margins at 8.0%. PAT was 251 crore rupees with PAT margins at 2.5%.
It is interesting how their margins decreased between Q4 and financial year 2025. The next slide presents the consolidated balance sheet.
The balance sheet shows the assets, liabilities, and equity of the company as of March 2025. Non-current assets were 3,780 crore rupees, including property, plant and equipment, goodwill, and other intangible assets. Current assets were 4,648 crore rupees, including inventories, trade receivables, cash and cash equivalents, and other financial assets.
On the liabilities and equity side, equity was 2,310 crore rupees. Non-current liabilities were 1,561 crore rupees, including financial liabilities and deferred tax liabilities. Current liabilities were 4,556 crore rupees, including financial liabilities, trade payables, and other current liabilities. Turning to the subsequent slide, let's examine the consolidated cash flow.
The consolidated cash flow statement shows the cash inflows and outflows of the company for financial year 2025 and financial year 2024. Net cash from operating activities was 711 crore rupees in financial year 2025. Net cash used in investing activities was minus 953 crore rupees. Net cash from financing activities was 323 crore rupees.
The final slide gives contact information for the company and its investor relations advisors.
That concludes the review of Amber Enterprises Q4 financial year 2025 and financial year 2025 results presentation.